about Ideanomics. IDEX. Now, before we get started, I just want to let you know that these are strictly just my opinions and that I am not a licensed financial advisor. Everything that we talk about is strictly for education and entertainment purposes. Always do your due diligence, always do your research before you ever invest in anything that we talk about on our show, okay? So first and foremost, I just want to make sure we're on the same page, that we are strictly for education, entertainment purposes, and we are not a financial advisor. So what we're going to do today is we're actually going to look at the Q2 earnings of Ideanomics. But before we do that, I wanted to actually go through their website and talk to you about some key things that I think are important that you need to know about this company. First and foremost, Ideanomics is in the electric vehicle space. And you can see here, if we read a little bit about them, Ideanomics is a global company driving mobile energy, transformation, and the green fintech revolution. We combine deal origination and enablement with the application of technologies such as artificial intelligence, blockchains, and others as part of the next generation of smart financial services. You can see here, driving mobile energy transformation, Ideanomics Capital driving the green fintech revolution, and Fintech Village, headquarters for technology and innovation located in the heart of the East Coast. Those are some of the divisions of Ideanomics. This is the CEO, Alf Poor. Technology and innovation are the catalysts for change. They hold the potential to improve a vast array of industries by acting as a force multiplier and driving greater efficiencies, transparency, governance, and so much more. Technology creates opportunities, and Ideanomics is constantly exploring technologies that can have a lasting impact on everything from streamlining supply chains for the benefit of all stakeholders through to improving our environment. This is the website. It is ideanomics.com. You can subscribe to the newsletter and get access to all the information. Okay. Now there is going to be a conference call happening and we are going to stream it today. So I want to make sure that everyone gets the opportunity to see it first. If we go to About Us. Okay, and we go to Ideanomics About Us. If we go to learn more about our mission, Ideanomics on the Nasdaq under the symbol IDEX is a global company focused on facilitating the adoption of commercial electronic vehicles and developing next generation financial services with fintech products. Huge. And if you know me, you know that I love electric vehicles. I've talked in length about Tesla, Neo, Solo, all three of which have gone up dramatically since I've talked about it on our show. And I believe IDEX also needs to be in that conversation. Its electric vehicle division, Mobile Energy Global, MEG, provides group purchasing discounts on commercial electric vehicles, EV batteries, and electricity, as well as financing and charging solutions. So kind of like a picks and shovels play for the electric vehicle space. Ideanomics Capital includes DBOT ATS and Intelligenta, which provide innovative financial services solutions powered by AI, artificial intelligence, and blockchain. MEG and Ideanomics Capital provide our global customers and partners with better efficiencies and technologies, our greater access to global markets. The company is headquartered in New York City and has offices in Beijing and Qingdao, China. So this is a company that is really on the cutting edge of something huge. And I'm not trying to tell anyone to buy this. I just want to make people aware. So this is IDEX on Nasdaq.com. We are talking about a Nasdaq stock here. It is currently up 10% right now. So IDEX having a very nice day right now. You can see here on Nasdaq.com up 10.74%. All right, and if I scroll down here on Nasdaq.com and I look at the 1-year chart, you can see that we've been as high as over $3 for this stock. We've been as high as $3.98 for IDEX. It's been as low as 39 cents in June, had a huge run up to $3.29 June 22nd. Massive, massive move. Literally a 10x move. And then it's consolidated, came back down, trying to find its floor, came back down, trying to find its floor. Finding a floor, it seems, and a bottom around 122, and then again around 125. And now here we are at these prices much higher now. So I believe that this is a company that has a lot of upside. I think there is a lot of potential, but you know what? It's a stock that's gone up and it's also come down. So as an investor, you always have to be careful, do your own due diligence and do your own research. Obviously, anything that's gone up from, as you can see here, 30 cents to $3, it's up 10x. Obviously, it can definitely come back down. But because it's already come up to $3, I think as an investor, we're looking at the potential that maybe it goes back there. Okay. Now, I'm not saying it will, but as an investor, we're looking for clues. And the fact that we've seen it go up to $3 maybe means that that's where we'll see some resistance. Now, I'm not saying it's going to go to $3, but I'm saying that if it does go to $3, it's probably going to meet some resistance there, because the last time it went to $3, it met resistance at $3. Now, consequently, on the other side, when it came down, it seems to find buying pressure around the 120 range. So every time it dips around 120, it seems to buy up. Dips around 120, seems to buy up. So I'm not running and telling you guys to go and run and buy this stock. It's not why I'm doing this. I'm just trying to educate you guys and show you another company that you may want to put on your watch list and put on your radar. They are going to do their second quarter 2020 conference call, and that will be happening after market today. So I wanted to bring you some information about them before they go live. Okay. Can see here that this call will be happening after market at 4:30 p.m. Eastern, 1:30 Pacific. So we're just going to close the market and do some more research on this company and try to identify why I think this could be an interesting company for our community to look at. So this is Dr. Bruno Wu, who is a Chinese billionaire and can be compared to the Steven Spielberg of China. And his wife, Lan Yan, can be considered the Oprah Winfrey of China with their social status and popularity. His companies currently own 19% of IDEX. So Bruno Wu, who is a billionaire, owns 19% of IDEX. And guys, you guys know that I love to identify undervalued, underappreciated, underexposed opportunities. Well, if this billionaire believes in this company, we should at least be looking at it. China entertainment and media pioneer Bruno Wu is unusually well positioned to benefit from the explosion of interest and business in the country of late. His 7 Stars group of companies is involved in everything from film production to PE investments. Shares fortune with China entertainment celebrity wife Yan Lan. So This is one of the major stakeholders in the company, currently owning 19% of IDEX. Now, another person who actually owns a big piece, or a piece, let's just say, of this company. Let's go and look into this. Let's look into these guys a little deeper. I've always been a big fan of the WWE, World Wrestling Entertainment, and Shane McMahon, who is the son of Vince McMahon, happens to be a minority owner of and producer of the WWE. He's also the executive vice chairman of Ideanomics. That's right. He's also the executive vice chairman of Ideanomics. So let's see if I can find him here. Let's take a look. It's the board of the directors. There it is, Shane McMahon. So as you can see right here, Shane McMahon. Oh, I don't know why it scrolled away. Why are you scrolling away? Okay, let's go back. Let's go back all the way to the beginning. And there it is, Bruno Wu. And right there, Shane McMahon. There's Shane McMahon, vice chairman. Let's see if we can, it always wants to just bounce off the screen. Let's go back and let's go to Shane McMahon, Twitter. Let's follow Shane McMahon on Twitter. So Shane McMahon has 647,000 followers on Twitter. And he happens to also be the executive vice chairman of Ideanomics. Pretty cool. So this is pretty interesting that Shane McMahon is a minority owner of this company. I actually didn't know that until I did a little bit more research. This is Alf Poor, the CEO, and some of the members of the board. Okay. Let's look at company mission. Went through that. Our partners. So you can see some of their partners. Like, I mean, these are big names, big partnerships, and many of them. So you can see big names, big partnerships, and many of them. Now, if we actually break down some of their divisions, let's take a look at this. What is Mobile Energy Global, MEG? Why is it called Mobile Energy? Advancements in electric vehicles, robotics, Internet of Things, and batteries, along with other mobile technologies, allow us to distribute and sell energy in a mobile and agile manner. Mobile energy. This is the focus on electric vehicles. 70% of all new energy consumed in the electric automotive sector. Commercial vehicles, example, heavy trucks, commercial buses, last mile delivery vehicles, and taxis account for approximately 70% of all new energy consumed in the electric automotive sector. The commercial vehicle opportunity in China is enormous. We are talking about a country with almost more people than anyone else on the planet. So I would say China and India have the biggest populations. So clearly a huge opportunity here. The commercial vehicle opportunity in China, 11 million units, heavy duty trucks and off-road vehicles, 14 million units in delivery vehicles, 1.6 million units in city and tourism buses, 1.2 million units in taxis and ride sharing, and 100,000, that's right, 100,000 gas stations to be converted to charging stations. So we are just in the beginning of this electric vehicle boom. So you can see here near-term revenue opportunities for Ideanomics. Ideanomic fees derived from group purchasing of commercial vehicles. So it breaks everything down. In the United States, the company has started a dialogue with several companies to gradually develop sales cooperation with freight trucks and other special vehicles. The major 3 priority markets for Ideanomics are the USA, China, and ASEAN. 4 types of new energy vehicles, heavy-duty trucks and off-road machinery, logistics, vans, buses, taxis, and ride sharing. Let's go to Ideanomics Capital. Ideanomics Capital, the nascent digital asset landscape offers a significant opportunity for those who utilize this market wisely. Ideanomics partners with clients to navigate hurdles and provide the infrastructure, tools, and advice to engage with digital assets confidently. Ideanomics continues to build upon its holistic suite of services to ensure clients safely and profitably engage in these new and exciting instruments. Unlock the value of digital assets and AI through regulated, compliant, and transparent platforms. Delaware Board of Trade, DBOT, bringing best practices of exchanges to small cap marketplace with speed, security, and seamless execution. Intelligenta AI and machine learning solutions for financial institutions and regulators. Now let's just see if there's any big news that they've put out recently. So you can see on their website their latest news that they've put out. I guess they had a video out on proactive investors. Let's see this. Going through some of the news right now. This looks like a very interesting press release here. Let's see if we can see this quick video.
This is Robert Kraft, and I'm your host on SNN Network. And today joining me is Alf Poor. He is the CEO of Ideanomics. It's a publicly traded company. The symbol is IDEX on Nasdaq. Alf, welcome back. It's great to see you, and how are you holding up?
Great, very good, thank you. I wish we'd get the haircut. Otherwise, everything's good, Rob. How are you?
I know, same here. I'm running out of gel at this point, but I will just get more gel, right? Anyway. So it's actually been a while since we had you on the program. I believe about 7 to 8 months. So,
correct.
So I'd love to get some highlights for the company since we last spoke.
Some really big things that have happened since we last spoke is we brought our lease financing funds online in China. That helps us fulfill a lot of the large order book that we've been developing over the last couple of years. We did something incredible towards the end of last year. We struck a deal with the city of Qingdao to base our EV hub. It's going to be a multi-manufacturer expo so that major fleet operators can come in. That's really important. We did a soft launch of that this month as China starts to reopen with social distancing. But we're expecting to do a full ribbon cutting on that. That's 1 million square feet of state-of-the-art showroom space with a welcome center that'll go online towards the end of next month. So those two things in particular are really meaningful for what we're doing.
Perfect. So, one of the things that I had to ask you about, and I know my audience who may be following the story, or maybe even new investors that are looking at, maybe recent announcement or recent quarterly results, and you're like trying to put two and two together. Over the last 6 months or so, as you just alluded to, the company has put out news from your MEG division, creation of new business entities, et cetera. All what sounds like very exciting news. And yet, revenue for the year ended December 31st, 2019 was 44.6 million as compared to 377.7 million for the same period in 2018. And then revenue for the 3 months ended March 31st, 2020 was 0.4 million as compared to 26.9 million for the same period in 2019. So I just have to ask, put two and two together for me. What's been going on? What's changed? Tell us.
Yeah, so these are important questions. In the last couple of years, we've been transforming the business. So 2018 to 2019 revenues, they're really from business lines that we're no longer in. So we decided to really develop MEG and the EV business as our kind of crown jewels. And so what you see in the results is a transition, as I said, from those old business lines into what we believe is a new, much more compelling high growth business that we're now in. The Q1 results, obviously our Q1 is going to be what the US's Q2 is, because obviously most of our operations and our activities in China at this time. And obviously that was the source of the coronavirus and the first country to really impose strict shutdown measures. So that impacted us during Q1. So our Q1 kind of shifted over into Q2. But 2020 is the year where all the chess pieces are in place. We have the financing capabilities. We have a very large order book. We have fantastic partners. We have a new center in Qingdao. Everything's ready for us to begin executing and start showing, the fundamentals for the new business.
So Alf, I also have to ask, you mentioned going away from the old business lines in order to welcome in some of the new business lines. What are some of the reasonings for why the company did that?
Yeah, so if you look at when our chairman first came in 4 years ago, this was an old media business. It had really seen out its shelf life. It was starting to wind down. So our chairman brought to the table some interesting technologies that he had investments in AI, machine learning, and also in blockchain. And so what we did was we took a look at some different industries that we thought were in transformation. One of those was financial services. One of those was the electric vehicle industry. So we made some investments in the financial service industry. We generated some revenues from those, but we weren't as pleased with the opportunity as what we saw in electric vehicles. So we began to step away from those and move more and more of our time and our energy into the opportunity that the EV is. And EV is significant for us because it's not about the vehicle. Okay, it's about a transition in energy demand. Okay, millions of vehicles are going to stop using gasoline and diesel, and they're going to start using electricity. We want to play a part in that revenue stream of that energy demand.
It's interesting, your business strategy, because I've interviewed a number of companies that are either working on the battery or some type of technology to make EV more efficient, and yet some are focused in North America, but you guys are going direct to China to go after this market. Tell us about the thought process there and what's your approach.
Yeah, the reason we're in China is very, very simple. Two reasons: scale and regulation. China has big population cities, some 20, 30 million people. Okay, they suffer dramatically with pollution there. Think about the 1980s smog in LA. That's what happens to big cities like Beijing and Qingdao every day in China. And actually COVID-19, when we put a pause on society, demonstrated just how bad the pollution from vehicles was. Because when they started to shut the cities down, they started to see the blue sky again for the first time in a long time. So we chose to focus there because of the regulation. Okay, when you've got a regulation-driven environment, then you can more or less understand how your results are going to be. Okay, when you can achieve results, as opposed to trying to innovate and find your way through new markets. So the fact that China is, mandating all of its 1.8 billion to 2 million buses be converted from diesel onto battery by 2022, that gives us a really good goal that we can work with. So that's why it was compelling for us. I mean, we do have international operations. We are active elsewhere, but we're looking to take advantage of that regulation-driven advantage we have in China.
Absolutely. So, and I also have to ask, look, unless you, listen, I'm not going to judge or I'm not going to prejudge and assume that you may or may not have a Chinese passport or maybe a Chinese national, but, going for outsiders to go and work in China, it's sometimes really difficult to penetrate that market. So, what plan or what have you guys put into place so that Ideanomics has a chance for success in China?
Yeah, so I have a visa to get into China. My US passport, the same as most other people have. China's incredibly business friendly. I think we've seen recently, the way the supply chain shut down. Most of the world relies on China to be its manufacturing base. So it's very easy to do business there. It is quite open. It's much better than it perhaps looks from the outside sometimes. But we do have a strategic advantage. Our chairman is a Chinese American. He's married to a very high profile lady in China. So we have something of a power couple there that I can't say haven't been very useful to us as we've tried to navigate through China and get some of those doors open, particularly when it comes to talk to government departments and things like a deal with PetroChina. Without his political social capital to be able to open those doors, I don't think we could have achieved a deal with a large state-owned entity like that.
Okay. All right. So for those who may have missed our first interview as well, just we're going to take a step back here. Let's give a quick overview of exactly what the company and the technology, what you're developing, and then looking to sell in China.
Yeah, absolutely. So it's very simple. We've developed a model called S to F to C, which is sales to financing to charging. Okay, and really for us, as I said earlier, the seismic shift that's going to take place as commercial vehicles move over to electricity. Remember, it's regulation driven, so they have no choice. That's going to see a huge shift in spending away from gasoline and diesel onto electricity for charging and for batteries. Okay, so we want to take advantage of that. Okay, so what we do is we go out, we use sales and financing, okay, to acquire large-scale fleet customers. Once we've acquired those customers, we want to sell them prepaid electricity and access to charging stations in partner networks, so we can earn strong recurring revenues from that. So, we don't want to be the next GM, even though we do own an EV manufacturer in Malaysia. We want to be more of an ExxonMobil. We want to play in the space where the real commerce takes place, which is in the energy.
Perfect. Okay. So with that out, from what you can tell us, what are some of the company's goals and objectives now for the rest of 2020?
Yeah, so it's an interesting one. You start in the world's most populated country that's got heavy state funding into EV to cure its pollution problems, and you make your mistakes at scale as well as you get your success at scale. So, we've been putting our chess pieces in place. COVID-19 slowed us down. It deferred, what we thought would be the start of the success in the beginning of 2020 into starting in Q2. But we've got a very, very robust, diverse order book at this point that we're looking to fulfill. So I think customers can see quarter-over-quarter growth. Investors like to see quarter-over-quarter growth. I think we can give them that. I think as we're regulation-driven, the market's unsteady right now. I think when you're regulation-driven, you're pretty well insulated against any economic downturn as well. As we start to shift through the gears and we start to execute on the strategy that's really taken us about 2 years as a business, but for our chairman, it's about 7 years worth of kind of vision and investment. We're ready to start executing, and we've already started order deliveries.
Well, with that out, where can my audience go and find more information about Ideanomics and follow?
So there's like a video that I saw about the company that was directly from the CEO, and you can get a chance to learn a little bit more by watching these videos, and you can just literally follow the company's news. And this is how I research companies. People are always like, how do you find these undervalued, underappreciated, underexposed companies early before anybody else in the world? What is your strategy? What are you doing? How are you finding them? What is your secret? Research, 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 and more research. There is no secret sauce. There is no special thing that I'm doing. I'm not keeping any secrets from anybody. It is simply doing the research, putting in the time. For example, the market's about to close. And as the market closes, Ideanomics is about to announce their Q2 financials. Well, here we are, ready for the Q2 financials. We're ready for the conference call. We want to be there. We want to be there, right? I want to be there. And we're going to be there right now. We're signing in. This is called putting in the work. Some people go to the beach. We put in the work. Here we go. So conference call is going to start in about 20 or so minutes. So when it does start, we'll definitely, obviously stream it for you guys. In the meantime, I'm not going to be streaming music. So we'll just wait patiently. If you guys have any questions, please let me know. And then in the meantime, what I'll do is I'll continue to do more research and continue to find out more about this company. That's all I can do, is just continue to find out more about this company. Now let's learn about the founder's story. Dr. Bruno Wu, a seasoned investor, media entrepreneur, and philanthropist. Dr. Bruno Wu recognized that emerging technology companies need more than financing to succeed. He believed that by forming partnerships with them and providing a unified platform, he could help these companies accelerate their growth while facilitating the global adoption of innovative technologies with significant economic or environmental benefits. These views led to the creation of Ideanomics, a single company operated by experienced executives who are managing a portfolio of new technology companies and providing them with financing, operational, and marketing resources, and acting as a strategic partner to promote their growth. Ideanomics was founded in 2017 as a business transformation of an existing media company and is traded on the Nasdaq under the ticker symbol IDEX. Ideanomics is forging the new paradigm on how emerging technology companies grow and how industries embrace innovation. The company's significant resources, including talent and partnerships, combined with portfolio synergies, empower Ideanomics partners to thrive and helps industries benefit from the evolution of technology. You think that 10 cents earnings are going to be good today? Very possible. Yeah, I'm a big fan of 10 cent. I'm a big fan of all gaming stocks. So this is the founder story. Let's take a look at Fintech Village. So this is Fintech Village, a global headquarters for technology and innovation. I love this. The state-of-the-art campus includes 58 acres total, designed as a smart IoT, which is Internet of Things enabled campus. This is beautiful. This is exactly what we need. A technology hub campus. with Internet of Things enabled campus. Internet of Things means all technology coming together and being compatible. High tech, SaaS labs, and office space, mixed residential and retail component, open campus with 5 acres of indoor public space. So these are the areas of focus: fintech, regtech, insurtech, cybersecurity, trade tech, consumer tech, health tech, agri-tech, and sports betting. So these are their 4 pillars: inspire, building a community of innovation focused on blockchain technology, digital assets, and AI. Impact, ushering in a new era, digitalization for the purpose of private, public, and social good. Invest, investing $283 million to transform the former Yukon campus into the world's leading fintech hub and future high-tech job market. Partner, bolstering the economy of West Hartford through the creation of 330 new jobs and the generation of significant tax revenue. Fintech Village, located in West Hartford, Connecticut. Wow, that looks just gorgeous. The Fintech Village campus will serve as a world-class center of excellence, leveraging best-of-breed developments in high technology for the purposes of high-impact private, public, and social good, thereby enabling the digital transformation of traditional industries. Yeah, let's watch a video.
Ideanomics invites you to join us on this unique tour of our proposed transformation of the beautiful former Yukon West Hartford campus into an international center for financial technology and innovation, a place where the community can gather. Ideanomics, a U.S. company that is in the vanguard of financial technology, or fintech, has created a unique, strategic design with features and benefits closely aligned with West Hartford's visioning process. It will include a community center, an art gallery, enhanced wetlands and a connection to the Trout Brook Trail, and an open, walkable campus with green spaces and recreational features. Some parts of the campus will evolve, such as the Information Technology Building. Other features will be maintained, such as the ball fields. And some will be enhanced and protected, such as the plentiful green spaces, trees, and wetlands. We call it Fintech Village. Let's go take a look. On the left, our new art gallery is the first building we encounter on the tour. The art gallery is one of several buildings that will be designed and constructed as a public space, open to all. When open, it will showcase a collection of local and international works of art. Throughout the campus, special care has been taken to preserve and enhance the site's natural features. This is evident here at the wetland park and walkway situated at the southern gateway to the campus. Buildings, landscapes, and plazas will be connected through a network of pedestrian routes, many of which will be marked with signage to highlight notable conservation features.
So this is a little look at their Fintech Village, which there's a video of right on their website. You can learn more by going to their website and taking a look at the Fintech Village. And if we go into in the news, This is obviously a news release that they put out in a different language that I'm comfortable with being able to explain. Listen to podcast. The EV transition and electric vehicle charging evolution, clean tech talk with Ideanomics CEO Alf Poor. See if we can just listen in a little bit here.
This is Clean Tech Talk, Clean Technica's podcast series interviewing clean tech leaders from around the world.
For sure. Be pleased to.
Yeah, we'll dive into different aspects of that. To get rolling, Alf, what's your overview look, your bird's eye view of the EV charging landscape right now?
From my perspective, I think it's still nascent. I think there's a lot of range anxiety out there because there's not enough awareness. There is actually a good number of charging stations in most countries at this point, but people don't seem to understand where to find them or what there is, because there seems to be a lack of, as I said, awareness in the marketplace. I'd love to see that improve.
Yeah, and we're talking, you want to focus globally right now or US only?
No, we can focus globally for sure. Be pleased to. I think the challenges are the same, even though there's different degrees of progress.
Yeah, I've
regions of the world.
Yeah, I lived in Europe for 10 years, and there's a period of time I was walking by a charging station every day. Basically, it was like a 5-minute walk between my home and where we went shopping for groceries and stuff, and it was just very discreet charging station, and I didn't realize it was there. It was right in eye's view, like not far, not even hard to. Didn't have to squint. But I went for a test drive of a plug-in hybrid in Poland there, and found out that there were charging stations in the city, which I assumed there weren't. And then I looked at the map, and it was right there where I'm walking every day. And I think it's really that's the kind of situation you have, even when they're more visible. If you're not an EV driver, you don't notice them. Do you have any favorite solutions for this?
Yeah, we do. One of the things that I find most interesting is we're trying to change consumer behavior, and that's a difficult thing to do. And we're actually involved in China in a pilot project with PetroChina. They're obviously the main automotive energy distributors, the oil and gas companies at this time, but that's obviously going through a seismic shift. As we get to the tipping point with EV, well, it's going to be the electricity providers that are going to be taking over.
So I had a question: is it the Shane McMahon? Yes, it is the Shane McMahon. If you go to Ideanomics.com and you click on their leadership, you can actually see the board of directors, and there it is, the Shane McMahon right there. The Shane McMahon is their vice chairman. So the Shane McMahon from the WWE is their vice chairman. So they've got some, Shane McMahon owns 4% of IDEX, and Dr. Bruno Wu owns 19% with his companies of IDEX. So those are the two big billionaire families that are well positioned in IDEX. We've got a billionaire in Dr. Bruno Wu, and we've got the billionaire family of the McMahon family of WWE, Vince McMahon's son, Shane McMahon, who owns 4% of IDEX. So it is the Shane McMahon 100%.
Providing that energy demand. And They have
Just
a very
waiting for their
different,
earnings, guys.
Viewpoint on this. They've done a study over in China that shows that consumer behavior is very hard to change. And right
Okay, guys, now
they've
after market, it is down. Just full disclosure, it is down after market. When I talk about a stock, I'm not telling you to immediately go buy anything. Okay, I want to make that very clear. This stock right now is down after hours. Now that could be because it's a buy the rumor, sell the news event. It is up. It did finish up 9.2% on the day, up 15 cents at $1.78. But it is down after hours now at 168, down 10 cents after hours, or 5.62%. This could be a buy the rumor, sell the news event. Maybe some people know something about the earnings that are not going to be that great. Maybe it's just people selling. I don't know. We don't know what the earnings look like yet, but we do know that IDX had a nice day today and they are now down after market. Might be a buy the rumor, sell the news event. I'm not sure. We will definitely try to figure that out and definitely stay tuned. Let's see what they're saying here. Okay, we're still just listening to music right now for Ideanomics. I don't think we'll be too much longer until the conference call starts, probably in about 11 minutes. We don't want to listen to too much elevator music here. So what I'll do is I'll continue to listen to this podcast.
showed that most of the people using EV charging stations, have to do it. So they have no choice. It's being forced upon them, right? They can only get charged where either at home with their own trickle charge or out in the field where they can find them. And the study came back that it was done in China by one of the government ministries. And it basically said, there's a much bigger opportunity here, particularly as it pertains to range anxiety, around starting to repurpose the gas stations. And that does two things for a state like China. I mean, the utilities are state-owned, the petrochemical companies are state-owned, but they obviously don't want a big disruption to that. So what they've done is they've started a program. We're helping them with it along with CATL, one of our charging operators and battery partners, is to go into the gas station. Say there's 10 pumps, take the first 2 of them away, replace them with EV, and then over a 5, 10, 15-year period, depending whether it's city, suburban or rural location, begin to remove the gasoline and diesel pumps until they become the 2 as an exception, and the other 8 would be for EV charging. And they think this will do a couple of things. One, as the charging technology progresses, the faster the chargers are getting. As the battery technology progresses, they can take the direct DC charge without heating up too much, which is one of the big issues now. And they think not changing the consumer behavior, which has been built over about 100 years, right, of mass cars being pretty much global. They think that's a much better solution. I like that idea a lot because for me, I would want to know that I've got the same dependence I have where if I want to drive from New York to Florida, I don't need to know where the gas stations are. Okay, I know that there's a robust network out there that can service my energy needs. I think that's where we need to get to with the EV charging as well.
Yeah, it's funny because there's such you have sort of all different scenarios in this transition, and I think anytime you talk about one, it doesn't apply to others, and so you sort of have this issue of you have to recognize that there's all these different segments of the market. So I mean, for the vast majority of EV owners today, they do almost all their charging at home or at home and work. But then you have the scenario where even if that's the case, they typically want to know they have a place to charge easily on their favorite road trips or wherever they're going to go on a long distance drive. So you have sort of this dual need of, first of all, helping people to understand that there's actually a greater convenience to EV life because you can often just plug in when you get home or at work or some destination, and you don't have to actually do much. So there's I think the convenience factor. The thing that frustrates me about the focus on range anxiety is depending on the individual, you might not ever have it anyway, but also it just sort of takes away from the point that there's a greater convenience factor to home charging and workplace charging and even destination charging. I don't have home or workplace charging, but we charge at the grocery store, and that handles it adequately every week. But that case of, not knowing, I think, is the biggest factor. And so people have to understand their options, and they have to understand also, like you said, if I go on a road trip to New York or something from Florida, I'm going to be able to charge these places. And I think for right now, people don't even have a picture of the landscape. So I think that's one interesting approach. You have other interesting approaches to this sort of, I guess, this question of just this issue of people just not being aware of how it works.
Yeah, I think you touched on something significant there. If you take, we live in the New York, northern New Jersey suburbs because our offices are in New York. So, of course, I catch the train in. But my wife works in New Jersey. So she does about a 25-mile round trip per day. At first, you start plugging the electric vehicle in every night because you're panicking. Now we literally plug it in once a week.
Yeah, it's so. You see this over and over. Everybody, when they first get an EV, they plug it in every day, and then a lot of people switch to every other day or every week, once a week. Yeah.
Yeah, and it's now at the point where we trust it. Initially, we were worried. Now I think if it gets 2 charges a week, because she's mostly just doing a 25-mile round trip commute, or the weekend trip to the grocery store or Costco or whatever the kids are up to. That seems to be able to handle that within 1 or 2 overnight trickle charges a week. And what people don't understand from that perspective, for most consumer vehicle needs, is you are no longer. There's a lot of freedom comes from this. You're no longer dependent on having to queue up in a line at a gas station in commuting hours or something like that because your tank is low. You just deal with it all at home overnight. It happens by magic almost. And it's really a very, very different experience that I think people take a while to adjust to, as we did. As I said, initially we didn't trust it. We charged it every night. Now we don't charge it until the indicator comes on.
Yeah. And I think, long ago, before I got into this field, I got a graduate degree, master's degree in city planning from University of North Carolina, Chapel Hill, and I worked promoting bicycling and mass transit and sustainable development. And so I was focused very early on how little people actually drive and how much that can be replaced by biking or other options that are. But the thing I kept finding that sort of just really was like a slap in the face repeatedly is that people didn't understand how limited their travel was and how much it could, how.
Now, one of the things that we really want to focus here on is Ideanomics has really focused on creating a 100,000 square meter, 1 million square feet facility, which will host a state-of-the-art sales and service center for new and used passenger and commercial electric vehicles, otherwise known as EV electric vehicles, and on-site financing, insurance, and vehicle registration services. Remember I told you guys a picks and shovels play for the electric vehicle space? They want to focus on providing on-site financing for electric vehicles, insurance, and vehicle registration services specifically for electric vehicles. In addition to generating many new jobs in Qingdao, our world-class sales and service center will feature a full end-to-end customer experience with financing, insurance, and vehicle registration and maintenance all under one roof, said Dr. Bruno Wu, chairman of Ideanomics. With a range of leading EV brands available on site from our manufacturing alliance partners, our fleet customers will enjoy a competitive buying experience, which focuses on education, test driving, and flexible financing programs to provide the vehicles required to meet their needs in an immersive environment unavailable anywhere else today. The new state-of-the-art center will assume the current vehicle sales and revenue activities at the site, which the city of Qingdao has committed to the Qingdao Mobile New Energy Vehicle Sales Company Limited by injecting the existing business that they have projected to reach 1 billion RMB, approximately 144 million US, by year-end 2020 and grow to over 2 billion RMB, approximately 288 million US in 2021. Based on the 2019 actual turnover, the city's revenue projections in 2020 do not take into account any reduction in sales due to the impact of the coronavirus. Once Qingdao is established as its hub, MEG plans to set up several regional EV electric vehicle sales centers to provide nationwide service. Electric vehicles is hot. Told you guys about NIO, told you guys about Tesla, told you guys about Solo. Now I'm telling you guys about IDEX. And I think this one has a chance to be another huge winner. Now there may be some bumps in the road. It's not going to be perfect. Clearly it's not going to be perfect. There's going to be some bumps in the road. But this is a story that I can really get around and get my head wrapped around because I understand the importance of electric vehicles. I've always been a big fan of Tesla, right? And clearly Tesla's been a huge success. So the question is, will Ideanomics follow in the same footsteps as Tesla? And that's kind of where we're at right now. Do they follow in the footsteps of Tesla? Do they follow in the footsteps of NIO, which has just exploded from $1 to where it is today? Do they follow in the footsteps of Solo? You know, all of which have had ups and downs, Tesla included, and recently have had more ups than downs. So the question is, what will IDEX do? Okay, guys, so we should be going live with this earnings call any moment. I'm just waiting now for the call to go live. So stay tuned. If you guys have any other questions, please let me know. Wanted to do some due diligence, wanted to do some research. Multiple billionaires involved in this deal. It is an 88% buy on bar chart right now, so has a lot of momentum. It's a stock that's up a lot over the last few months. The question is, will this continue? We should be live any minute. I'm not a big fan of elevator music, so I'm probably not going to play much. Just going to hope that these guys go live and then we can jump on the call. Hopefully it'll be soon. Oh, elevator music. So hopefully they join us soon and we'll be able to hear this earnings call. Should be starting any moment. Okay, well, I'm just going to continue to wait for this call to start. And when it does, we will jump on the call. Now, here's the stock. You could see it's come up dramatically from 30 cents, been as high as almost $4. So it is a stock that has gone up 10x. It is retraced now and is starting to see resistance around $1.20 and support around $1.20, resistance from going down. It's getting support around $1.20 and bouncing up, around 125, bouncing up. And we did see it go over $1.80 today, and now is starting to come down a little bit after market. Let's see if this call is going to finally get started. Let's see. Okay, call hasn't started yet, but when it does, we will make sure we stream it live. G-Man says, first time investing, made $200 off of WinQuick stock. I'm holding. It's going to be the next TikTok. Wow. Yeah, I don't know if it'll be the next TikTok, but I definitely think it has a lot of potential. Just waiting for Ideanomics earnings call. Stay tuned, guys. Just waiting for it to get started. Thank you guys for joining me here. We are waiting for the Ideanomics earnings call. The stock did go up today, had a very nice day, and aftermarket is now falling down. So that's a little concerning. We have had some people say that they did have a loss. They reported a loss. That's why the stock is falling, but we're waiting for the call to go live so that we can hear directly from the company. So stay tuned. Could pretend.
Participants are in a listen-only mode.
Here we go, guys.
A brief question and answer session will follow the formal presentation. If anyone should require operator or technical assistance during the conference, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Tony Sklar. Thank you, Mr. Sklar. You may begin.
Thank you, operator, and welcome everybody to the Ideanomics Q2 2020 earnings conference call. Joining me today, I am pleased to have Mr. Alfred Poor, our Chief Executive Officer, and Mr. Connor McCarthy, our Principal Accounting and Chief Financial Officer. A webcast of today's call will be archived and available in our events and presentation section of our corporate website for a minimum of 30 days. As a reminder, this conference call is being recorded. During the call, we will make forward-looking statements such as dialogue regarding our revenue expectations or forecasts for the quarters and full fiscal years 2020 and 2021 related to our business. These statements are based on our current expectations and information available as of today and are subject to a variety of risks, uncertainties, and assumptions. Actual results may differ materially as a result of various risk factors that are being described in our periodic filings with the SEC. As a result, we caution you against placing undue reliance on these forward-looking statements. We assume no obligation to update any forward-looking statements as a result of new information or future events except where required by law. In addition, other risks and disclosures are more fully described in our Ideanomics public filings with the U.S. Securities and Exchange Commission, which can be viewed at www.sec.gov. Today, August 10th, the company will file a 10-Q with the SEC, and afterwards, we have issued a press release that is out now announcing our financial results. So participants on this call who may not have already done so may wish to look at those documents as we provide a summary of the results on this call. A format for today's call will be as follows. Mr. Alfred Poor, our CEO, will speak to the company's overview and business strategy, as well as the activities and developments for the second quarter and the fiscal 2020. Mr. Connor McCarthy, our CFO, will speak to the company's operating and financial results for the second quarter. And then I know it's everybody's favorite, the Q&A session. I will now hand the conversation over to Mr. Alfred Poor, Ideanomics CEO.
Thank you, Tony, and thank you to everyone joining that call today. I'd like to start the call with an update of the global electric vehicle industry. Based on Bloomberg's NEF reports, which I consider as one of the leading information sources to the industry, due to the advancements taking place in battery tech, combined with policymakers pushing for lower emissions, the accelerating level of investments in the EV sector, we believe the outlook for EVs is very robust. To date, numerous countries have announced plans to phase out sales of gasoline and diesel-powered vehicles. Beyond passenger cars, it is the municipal buses, mopeds, trucks, and light commercial vehicles which are forecasted to be leaders in their segment in terms of electrification. All of these are which, of course, target segments for Ideanomics. 2020 looks to be an important inflection point for the industry, evidenced by a very active IPO market for EV makers such as Nikola, Rivian, Fisker, and Li Auto. Over the past 18 to 24 months, we have strategically built a comprehensive range of services to support EV enablement by commercial fleet operators. We believe our S2F2C, or sales to financing to charging, business model positions us to serve this growing market. We are confident that our EV-related procurement and financing services will continue to attract commercial fleet operators, and that we are confident in our ability to market our charging and energy services to those operators such that we generate the sustainable long-term revenues that will drive shareholder value. I'm going to take you through some of the highlights of the second quarter, starting with the MEG division, where the company booked several $1 million in revenue and validated their business model and investments in that segment. The company's progress in the second quarter has meant that the third quarter is already off to a strong start. I'd like to say a big thank you to everyone in the Ideanomics family for the effort being made in 2020. We're proud of our business and what we are achieving as a result of the collective efforts of everyone. I'd also like to thank our growing shareholder base for their support. The MEG Center in Qingdao established operations in the second quarter and contributed to the second quarter revenues.
along with MEG's executive team based in Hangzhou. Our chairman, Dr. Bruno Wu, is on the ground in Qingdao at this time, supporting the local team and working with local officials to help close out sales to local municipal customers. Our order book continues to grow, and we are in an ongoing hiring phase in China to support the execution and delivery of our order pipeline. This month sees positive momentum within our heavy truck division. One particular order we're fulfilling at this time with our battery technology partner CATL is for a mining operations customer in Inner Mongolia. We announced in Q2 this division was named as the Dichi Motor Works. The rebranding of the heavy truck division is to support expansion efforts outside of China and into North America. Our interest in the truck segment is progressing faster than we originally anticipated. To participate in this interest, with the help of OEM partners in China and South Korea, we anticipate having cost-efficient versions of both battery EV and hydrogen to fuel cell heavy trucks to market relatively quickly. The process for doing so requires regulatory approvals for all vehicle types for the various road, weather, and safety conditions in North America, and we will keep you updated on the progress of that accordingly. With the reopening of government offices in Malaysia in June, the Tree Electric business was able to secure title to the approximately 250 acres of land we've been in the process of acquiring. And as a result, we are now in discussions with assembly and OEM partners regarding development of that land to further support the growth of the business. Similarly, the Tree Electric team is in discussions with financing partners around collateralization of the land for development. To support the anticipated growth in the ASEAN region, we are recruiting a CFO for Tree Electric, and we're in discussions with candidates who have automotive experience. And we've expanded the number of board seats at Tree Electric to include CEO Datuk Menon and a senior government advisor in Malaysia. During the second quarter, we raised money to beef up the cash on our balance sheet, and we will use the money raised to accelerate operational objectives, as well as for supporting our efforts in evaluating opportunities to accelerate our business strategically, such as accretive acquisitions. We see several opportunities in the market in the fallout of COVID-19, and where such opportunities can complement our organic growth or provide strategic advantage, we will move to capture the value for Ideanomics. For your reference, including in our presentation is a slide detailing our revenue model. I won't go over these details now, we've covered it in several previous calls, but the presentation is available on our website after the call. I will now hand the call over to Conor McCarthy, CFO of Ideanomics, for a review of the financials.
Good afternoon. Thank you, Alf. Ideanomics produced one of its strongest financial performances in the second quarter. The highlights for this quarter are our mobile energy global subsidiary, which we refer to as MEG, reported its best ever revenues. We finished the quarter with $36 million of cash in our balance sheet. We reduced convertible debt by almost $12 million, which is about 40%. The going concern qualification was removed from our financial statements, given the strong cash position we now have. And we continue to reduce our operating cost base through rationalization of the company's office leases, and we continue to look for other savings that in our cost base. I would now like to discuss the financial performance in greater detail. Revenue for the second quarter was $4.7 million, almost all of which was generated by MEG, the company's EV business. Second quarter revenues are the largest revenues from MEG since the company commenced the sale of EVs, and I believe demonstrate the underlying strength of MEG's business, particularly as these revenues were earned during a period when China's economy was still returning to normal after the COVID-19 lockdown. Revenues for the second quarter of 2019 were $14.4 million. However, nearly all of the second quarter revenues were earned from the digital asset management services contract that produced no revenues in the first half of 2020. Consequently, comparison with the prior period is not meaningful. Gross profit for the second quarter was $255,000, which represented a gross margin of 4.9%. Second quarter operating income was $16.5 million as compared to $8 million in 2019. The increase was due principally to a one-time non-cash impairment charge of $6.2 million, of which almost all related to the decision to terminate our office lease at 55 Broadway. Excluding the impairment charge, operating expense for the second quarter was $10.3 million versus $8 million in the prior year. The increase was driven by higher professional fees and remeasurement of acquisition earnout expense. Drivers of the increase in professional fees included expenses related to the continued development of the company's investors relations program, legal fees associated with the equity and debt transactions in the second quarters, and other regulatory matters. The loss from operations was $16.3 million. However, excluding the one-time impairment charge, the loss would have been $10.1 million as compared to a profit of $5.7 million in the prior period. The increased operating loss is almost entirely due to the lower gross profit in the current period, as the very high margins achieved from the digital asset management service contract were not repeated in the current quarter. And going forward, we do not expect to earn revenue in the foreseeable future from digital asset management services. As I stated earlier, management continues to look for ways to reduce costs and allocate spending to projects with the highest rate of return. I'd like to comment briefly on the interest and other income section of our income statement. Interest expense for the period was $8.9 million, which was almost all non-cash and represents the expense when U.S. GAAP accounting guidance is applied to the ratchet provisions in the company's convertible debt. The conversion expense of $2.2 million is also non-cash and results from the adjustment of the conversion price on convertible notes held by Dr. Bruno Wu and Mr. Shane McMahon. As previously reported, on June 5th, Dr. Wu and Mr. McMahon converted their notes to common stock in Ideanomics at a 30% premiums to the 5-day volume average weighted price at the date of conversion. The company considered this conversion to be very beneficial as it indicated Dr. Wu and Mr. McMahon's strong belief in the future prospects of the company and reduced the amount of debt outstanding. We recorded a gain of $1 million in other income related to the successful negotiations to terminate an operating lease held by one of the company's U.S. subsidiaries. That was a real estate lease that My final comment on the income statement is to highlight that the expenses for the second quarter include almost $17.4 million of non-cash expenses related to the conversion of convertible debt and the asset impairment charge for our office at 55 Broadway. Turning to the balance sheet. We greatly strengthened our balance sheet in the second quarter. We ended the quarter with $36.4 million of cash, which based on current projections is sufficient to fund the company at planned level activity for more than the next 12 months, which in turn means that the company believes that it has the ability to operate as a going concern. Holders of Ideanomics convertible debt converted almost $12 million to common stock, which represents almost 45% of the total principal outstanding before the conversion. We are in negotiations with Fintech Capital investment, holders of the $12 million note that comes due in June 2021 to restructure the terms of the note. Based on discussions to date, management is confident that these negotiations will be successful. In conclusion, the second quarter was one of milestones achieved. To recap, the highest revenues from MEG since the business commenced operations, strong liquidity with $36 million in cash on the balance sheet, providing a strong platform for future investment, significantly reduced levels of debt, and an effective S3 statement, which gives us the ability to raise capital to take advantage of strategic acquisitions in this buyer's market. And I'm now going to hand it back to Tony. Thank you.
Thank you so much, Connor. This concludes management's prepared remarks. I am now very, very excited for us to answer a few of our investor and analyst questions. So I'm just going to toss it back to Victor, our moderator, for a second so that he can explain how to raise your hand if you so speak.
Thank you. We will now have our question and answer session. If you would like to ask a question on the phone line, please press *1 on your telephone keypad. You may also ask a question through the web platform. I'm sorry, gentlemen, I'm having some technical difficulty here. My apologies, Mr. Squire. If you could take over, sir. It seems that my computer is frozen here.
You betcha. Absolutely. Okay. Then at that note, we'll just give it a couple more seconds here for people to get their messages in the queue. And our first person up here is Ray from Alliance Capital.
Capital, congratulations on a great quarter at 4.7 million in revenue. Gonna dial it back a little bit and go in the time machine. The Hindenburg and JCap research pieces that came out seem to be timed very well, coming out together. Any feeling that was maybe a coordinated attack?
Yeah, obviously, we feel that it was a hit piece, as they call it in the industry. We hired a global law firm, DLA Piper, to look into the matters for us. They concluded their work at this time, and to come back to us with a few recommendations to improvements to some processes to make sure that we make ourselves a little more bulletproof against those types of attacks in the future.
Okay, great to hear. Now, just a quick question around the revenue for the quarter. How successful was the MEG in delivering on the order book, and were any orders pulled forward, or did you hit the numbers as expected?
Nothing was pulled forward. A lot of activity towards the end of the month. Some of it did roll over into July, gave us a particularly strong start. I think this was a good quarter in terms of proving out our business model. I think you'll see in Q3 a significant ramp up in activities.
Okay, great. Thank you.
Thank you.
Thank you. Our next question comes from Susan Monroe, a private investor. Please proceed with your question.
Hey, Al. Great to hear from you. We've missed you the last 30 days. I know you guys have been busy. My question is, you've said in the past that financing is the key to getting the fleet customer orders. And I think you've previously stated that there would be hundreds of billions in local currency available for companies to place orders. Can you provide some detail on the financing pools that are now live? What value is in place? What are they utilized for? And are there any restrictions on use? And also, how much has been deployed currently?
Susan, thank you. That's a very good question. The reason to put those pools together was primarily to drive the big ticket items and the trucks. It's a slightly complex system that I won't bore you all with, which is you have to have a AAA rated. We're part of the consortia, so we help bring the money in from utilities and insurance companies and others. So you have to have a AAA rated entity with which to hold the assets that are being leased financed out. So a little bit of complexity in there. We haven't used any of it for the sales that we did in Q2, but there are a number of sales leading in Q3 that will be leading into those financing pools. Those financing pools are quite large. Some of them are hundreds of billions of renminbi. That is with a B, so hundreds of billions. And you need that when the cost of some of the vehicles can be 250, 300,000, and then there's multiple hundreds of thousands of units in some of the orders. So Q3 will see the activity of those. Nothing was completed in Q2.
Okay, thank you. Can I follow up with one more question, Al?
Sure thing.
On your interview yesterday with Clean Technica that was released, you talked a little bit about working with Bevan, and I imagine his trucks each cost quite a bit of money. Is there a chance that these funds could run out?
Certainly the funds will need to be replenished, Susan. It's a very good question. So there's two elements to this. The first one is the capital that's put up by the consortium partners to begin with. And then once we get close to tapping out that, so to speak, We'll then take it out to the market. We'll ABS refinance it to replenish the pool. And we continue to talk to the consortium partners who are getting government incentives and other things in order to make sure that there's plenty of capital available. But yeah, I mean, with those types of size of items, yes, it will take multiple funds and then the refinancing of multiple funds once we collateralize those assets to keep the pool topped up. The size of conversion that needs to take place in China to meet the regulatory deadline. We're in phase one of the financing. There'll be 2 or 3 phases. It'll be a much bigger, broader market. We do anticipate that other players will come into the market and we see what we're doing, how we're making money, because although you can't get capital out of China right now, there's a lot of capital in China. And we frankly welcome competition because it's always good. So I suspect that the short term, we'll capture a lot of order flow because we have these, but in the long term, I expect it to be part of the common stay of the market.
Gotcha. How much is the order book worth right now? Do you have figures on that?
I don't have the figures to hand. It changes every day with the new orders coming in. We're moving towards, which we hope to have set up for September. We're working on the template now. We're moving towards giving an update every month of both the orders and the deliveries, so you can understand what's coming down the pipeline. And you can also understand what we've done in a given month. And when we put that September number out, we'll put out the July and August numbers together.
Okay, fantastic, Al. Thanks, and thanks to the team. Keep up the good work. I know you guys have been working really hard. Appreciate it.
Thank you, Susan. Much appreciated.
Thank you. As a reminder to our audience, if you would like to ask a question, please press *1 on your telephone keypad. Our next question comes from Peter Wright with Intro-Act. Please proceed with your question.
Great. Thank you guys for taking my question, and congratulations on great quarter on MEG. And also, I guess I'll start on 3Q guidance. Nothing provided quantitatively, and it does look like you're going to start providing an order book and delivery numbers on a monthly basis, which is great, better than peer transparency. How would you characterize for us how customers are scaling into their fleet upgrades? And if you kind of put in terms, maybe what is with the press releases, we got some good ideas of kind of what the transactions look like in 2Q. How do you see this evolving from kind of the size of vehicle bases through the back half of the year?
Yeah, I think obviously we're not going to give guidance at this point because of one of the questions that was at the beginning of this segment around the short selling activities. I don't think it's a smart move for us. So what we are going to do is give those very factual reports every month, start from September for the July and August numbers. I think those will show you. But suffice to say, Peter, we're moving into the bigger ticket side of stuff. I referenced one particular deal we're working on for mining operations customer. That is about 100 heavy trucks and 200 batteries. They're buying 2 CATL batteries for every truck. So those are the types of order flow that you're going to start seeing coming through. Much bigger ticket, much bigger driver of revenues.
Great. And two little questions as a follow-up. Can you comment on any thoughts on the 12.5 million associated with the Fintech Village on the balance sheet? Is there any thoughts you can share with us on how to monetize this?
Well, at the moment, we're looking at an offer that's in due diligence progress from the town. There's some other interest from some private developers as well. The property is, the MEG segment is growing so fast, and the fintech segment, particularly some of the blockchain and other investments we did in 2017, 2018, they're not ready for prime time because there's no regulatory approvals to do what we want to do with them at this time. Not just for us, but for the likes of T-Zeros and everybody else out there. They're all waiting for SEC FINRA approval. So given where it is with MEG, we want to move our wood towards that. The landscape's changed a little bit. So we're looking to realize the value back out of it and try and find somebody who can, take the vision on for what we wanted to do, because I think it's a great location. I think, there's a fiber backbone between Boston and New York that services Connecticut very well. I think this will make a great campus for somebody. But at this point in time, it's been a heavy lift. It's been a drain on my resources, 1 or 2 members of the team, constantly in meetings with everything from the Wetlands Commission to the Department of the Environment to the EPA. It's just sucking a lot of time out of the business when, MEG is really starting to grow quickly. So that's where we want to put our words.
Wonderful. And very last question is, if you look at the MEG revenue breakdown in 2Q, is it pretty much for procurement spread is what is in the revenue in 2Q, or is there any financing spread included in these numbers?
There's no financing spread. As I mentioned to Susan, the previous question, Peter, we didn't make use of the funds in Q2. So we did all these placements with ad hoc financing companies and banks in China.
Wonderful. Congrats on a great quarter, guys.
Thank you.
Thank you. Our next question comes from Patrick St. Fort, a private investor. Please proceed with your question. Mr. St. Fort, you may proceed with your question.
Looks like he's gone.
Our next question comes from Chris Zarni, a private investor. Please proceed with your question, sir.
Good afternoon, and thanks for the time. Looking at the EV revenues in the 10Q, it looks like there was 55,000 in Q1 and 695,000 in Q2. Now that the MEG platform is operational, will you be sharing how the platform looks?
Potentially, yes, we would. Can you help me understand what you mean by how the platform looks? Do you mean in terms of the S2F2C model?
Yeah, so if you're interacting on the platform, I think investors would be interested to know how that kind of looks if you're a fleet operator or some other user.
Okay. Yeah, you mean the internally developed platform that we've built for the MEG team to take the orders in, to contract automation, things like that? I mean, at the moment, that's designed to be a B2B tool that we have. We haven't decided to show that to anyone because it's being used internally, and it's got a lot of what we've developed is what we consider proprietary information in it. But and it's very much in beta with the MEG team and the customers that are making use of it. So not sure we'll be planning to do that anytime soon. But I think as it becomes the top tip order with the manufacturers and others, then I think we'll be in a position to show it.
Great, thanks. And also one follow-up. Can you provide any updates on business development efforts in the United States for MEG?
Yes, thank you. That's a really good question, Chris. As you saw, we've decided to accept we weren't planning to do any business development for MEG in 2020. In fact, not until the second half of 2021. But given the way that the industry is moving right now and the fact that we're starting to get some inbound inquiries, we have inbound inquiries for everything from garbage trucks to city buses to school buses coming from the US and Canada. So we obviously need to be responsive to those inquiries. So we're setting up Medici Motorworks as quickly as we can to help service that. We thought it was important to have a brand in the US, given the strength of the brands that are already in the space. And this is our move into that space. It'll be slightly different from the way we work in China. In China, there's over 100 EV manufacturers. So we don't want to be competing with them making vehicles. But these are going to be Medici Motorworks branded vehicles that we sell in North America. Whether it's a bus, garbage truck, fire truck, or heavy truck for short haul or long haul, it'll be Medici. We're working with OEM partners out of China and South Korea as well to make sure we can bring cost-efficient vehicles. Because I think some of the other players in the market right now have pretty hefty price tags that I'm not sure all the small independent owner operators and others are going to want to pay for a truck when they're used to driving a Peterbilt or something that's pretty much bulletproof for 15, 20 years. So we see that as an area that we can really break into. And Medici Motorworks is our vehicle to do it.
Great, thank you.
Thank you. Our next question comes from David Joseph, another private investor. Please proceed with your question.
Thank you. Mr. Poor, congratulations on the earnings for the second quarter. The EV industry is really booming with the other companies like Tesla leading the way. There's Nikola, NIO, and so forth. And Ideanomics is obviously right in there with the rest of them. You're not a manufacturer, but you're a facilitator with the MEG Center. And the MEG Center is basically end-to-end services. What do you see for the future for the industry at large? And as well as how does Ideanomics fit in, and how will you grow along with the rest of those other companies that are doing very well in the EV sector?
Yeah, I mean, as you mentioned, two of the, and thanks very much for your question, David. Two of the companies that are making, the significant traction right now would be Tesla and NIO. That's primarily driven by passenger cars. We've obviously, used some Tesla vehicles to fulfill some orders in the taxi space. But so we're kind of an order partner for them. They're a downstream, manufacturer that would supply vehicles to our customers. It's a commercial space where the takeoff is only really just starting. The passenger space, I think, has been maturing over the last few years, passenger car space. So it's a commercial area where you're going to see it, and that's no coincidence that you see Nikola, Rivian, Tesla, others all starting to make noises on the commercial side. And with the regulatory-driven framework in China, it's been a little slow to get off the ground, but now it's happening because people are running out of that time window that they need to fulfill. So whereas we're not a manufacturer in China, as I mentioned to previous caller, because of the fact that there's over 100 manufacturers to compete with, we are a manufacturer out of Malaysia. We've got a Tree Electric brand, and we will be bringing vehicles that are assembled here and branded as Medici Motor Works for the North American and European markets as well.
I see. And with Medici Motor Works, you are going to be bringing in Tree Electric and Medici Motors into the North American market. How do you see that working out in the coming years? I understand California has passed some legislation where all trucks have to be electric. Am I correct with that statement?
Yeah, so California, as everybody knows, is a more progressive state with the environmental policy than most others in the States. Canada as well, you can be viewed more in the same spectrum as California is. They're mandating to get moved over to electric or hydrogen to electric fuel cell trucks in the relatively what looks like long term compared to some of the legislation in China and other Asian countries. But it's very, very important because the US market, North American market, Canada as well, is absolutely vast. We ship 70% of our goods by road. Most other countries don't do that. So this is a big and very important commercial vehicle sector. And obviously we've seen in the recent COVID, just, how Amazon and Walmart and others with local delivery vans as well have been able to, substantially increase their business. So I don't expect that to go away. So, it's going to be a really important market for us. In terms of Tree, will probably only be the bikes that we market. The Tree Electric in North America. Everything else we market is under the Medici Motor Works.
I understand. Very good. And going forward into Q3 and Q4, I gather we can expect the same type of revenues that are coming out of the company. You did a good quarter this year already.
That was the beginning. We expect to ramp up significantly in Q3, significantly more after that in Q4. A lot of the big ticket items are going to start to move in late this quarter, middle of this quarter, late this quarter, Q4 for certain. So you're probably going to see a lift in the revenue numbers. But it really depends whether we act as principal or agent. There's a little bit of US GAAP accounting rules. Connor's a bit more of an expert on than I am. But depending on how the deal is done, and depending whether or not we purchase the vehicles first and sell them, as opposed to just having it as a pass-through, depends whether we book the gross or the net revenues in that regard. But regardless, I think you'll see the number of units and the net revenues jump significantly from here forward.
Sure. And if I hate to take the stage here, the charging stations, I recall reading a news release regarding a charging station that you guys had initiated a few months back. What's the status of that?
So we with PetroChina, we have an ongoing project. The project we deliberately, along with PetroChina and CATL, we held it back a bit because the pace of technological advancement in battery storage and batteries and battery charging has been moving so quick. If we'd have done it as quickly as we signed up the relationship with PetroChina, we'd have put old charging stations in at the point when you could do a lot better. So we held back a bit. We're starting that program. But significantly as well, we've secured an order for our first what we call charging poles. So we're putting out more than 100 charging stations out into the field for a customer within Q3. So So that's going to be the start of not only the charging revenues from the energy segment of the business, but also the ability to sell the wholesale as more and more of the commercial fleets come online.
Excellent, excellent. Well, thank you. I'll get off the phone. Thank you very much. I'm long Ideanomics, and a very good quarter. Keep up the good work, gentlemen.
Thank you. Thank you so much.
Thank you. There are no further questions at this time. I'd like to turn the floor back over to Mr. Sklar for any final comments.
Thank you so much, operator. That is all the time we have for today. This concludes the Ideanomics Q2 2020 investor earnings call. We encourage our community to continue to reach out to us, and we can answer your questions on an individual basis. You can send those questions to ir@ideanomics.com. We'd like to thank all of our listeners, shareholders, analysts, and others who've taken the time to listen to our earnings call. We urge you all to refer to our latest SEC filings for any information that you may need. This call will be available on our website in the investors section, and you will find the link there. To be alerted to our news, events, and other information in a timely manner, we recommend you follow us on our social media channels, sign up for our newsletter, and explore our website at www.ideanomics.com. Thank you, everyone, for participating and listening on this call today.
All right, guys. Thank you guys for watching. Just a reminder that Rich TV Live is strictly for education and entertainment purposes. All the opinions and everything that we discussed in this video are strictly just my opinion, and that I'm not a licensed financial advisor. So do your own due diligence, do your own research, consult a financial advisor before you invest in anything that we talk about here on Rich TV Live.
Everyone, are we clear?
And
yes, sir, we are.
thank you guys for watching. If you're not winning, you're not watching. This is Rich from Rich TV Live, bringing you Ideanomics, a company in the electric vehicle space that I think you guys should have on your radar, have it on your watch list. It is falling right now because they did not meet the street's numbers. They had more losses than the street liked. So the stock is actually down 12% right now after it went up 9%. So it looks like it was a buy the rumor, sell the news event. Don't rush to buy the stock, but just another stock that we want you to put on your radar, put on your watch list. Remember what we talk about here on Rich TV Live. Find a stock you like, do your research, do your due diligence, identify the bottom, find a dip. If you really, really like it and it's dipped and you feel like it's now starting to come back up and creating momentum, you can then position yourself. And then when you see a return of 5% or more, nothing wrong with taking your profits. Thank you guys for watching. This is Rich from Rich TV Live, bringing you the earnings call from IDEX on the Nasdaq, Ideanomics, IDEX on the Nasdaq, already up 10x from its lows to its highs, consolidated. Electric vehicles are hot. Stay tuned. Just another one to add to your watch list. Let me know what you guys think. Comment down below on this video. If you like this video, smash the like button, hit the subscribe button so that you can subscribe to get access to all of our updates, all of our news as it happens 24 hours a day, 7 days a week. This is Rich from Rich TV Live. Thank you for watching. Have a nice day.